What's going on, guys? I'm going to make this real simple for you on Aapl. 145. Okay, we get a break of 145. We get long, whether you're an equities player or an options trader like myself. So I'm looking to get as close to 145, 144 strike price contracts as I can. I want to go in the money, right at the money. As soon as Aapl can break 145, let's look to ride this. I got a price target here of 146.99, so let's call it 147. The only reason that's going to be my price target, that's going to be the 50-day moving average. If Aapl decides to get a little squeamish on us and doesn't want to participate with the rest of the market, and let's say, for example, the triple Qs do not reclaim the 50-day moving average, what they are almost about to do, then we want to get out of the trading. We want to take our profits, reevaluate that later. It doesn't get any more simple than this. Even if you're not an options player, you buy a 145 strike price. So let's just take a look here. Let's just take a look. We'll go into, let's see what Aapl, October 22nd strike prices. Obviously this is subject to change. This is after hours, so this is not updated right now. Aapl one contract is going to be trading at $130, 1.30. If we go a little bit in the money, 188, 260. I even like this too. This is not bad at all. I mean, it depends on what this changes to, but as of right now, a 143 strike price for a weekly contract, $260. Okay, we get this thing to move 1 to 2 points on us. This contract could potentially double, at least $100 to $200. So definitely we want to go in the money, right at the money. When I say in the money, that means that if the current price right now is 144.87, in the money is going to be right here between 144 strike, 143, 142. These are all in the money. If I say at the money, that means just right outside the money. That would be 145 strike, 146. I really wouldn't go any farther than that. Even though our price target is going to be 147, I don't really want to pick up these. These are more like a lotto play here. When I play options contracts, I'm playing in the money or right at the money. So definitely looking to definitely look to play in the money with this Aapl, maybe 144, 143 strikes. Definitely with a price target in mind of 147. This is not rocket science, guys. Here, just take a look at the chart. We did find a bottoming base here off the linear regression channel 50. Made a couple pushes higher, a lot of supply here. And on Friday, this is a first close above supply. So what I mean, first close above supply, we closed over the 5-day moving average. We closed over the 10-day moving average. We closed over the 20-day moving average. Okay, so there is no more supply ahead of us until the 50-day moving average. And if we believe in the theory that stocks are going to trade from supply to supply and demand to demand, meaning that when stocks reclaim a moving average, they're going to trade sideways in between in that direction to the next moving average higher. When stocks lose moving averages, for example, if we close below the 20-day moving average, what is the next demand zone if stocks are going to trade from demand to demand? That would be the Bollinger Band. That would be the 5-day moving average. That would be the 10-day moving average. They're going to go down to each moving average. So being that we closed above all supply, we are looking to price target our next move into the next supply, when the next supply zone is going to be this 147.05, which is a 50-day moving average. If Aapl reclaims a 50-day moving average, next supply, we're going to have a little bit here at the linear regression channel 50 at 147.65. So only about a 65-cent move. Expect a little bit of chop, maybe even a little bit of dip into a rising 5-day moving average bounce. But once we get over that 147.67, it's open air and open skies to try to get back up here and start testing some of these all-time highs at around 156, 157. So definitely keep that in mind for tomorrow, Tuesday, Wednesday. We are looking for a 145 break, guys. I'm going to keep it very simple for you guys. 145 break. I'm looking for 143, 144, or even 145 strike prices. Weeklies, stop loss is going to be below. Let's see. Let's go to the hourly. Let's kind of get a better picture here so I can give you guys a better idea. Stop price is going to be below the 20-day moving average here on the hourly time frame, 144.21. So we're going to give ourselves We're just going to give ourselves about a 60-cent risk here. You know, we really don't want to play it because if we lose this 20-day moving average here, the next demand zone is 143.82. So now we're looking to lose a little bit more there. So let's keep our stop here at around 144, the 20-day moving average. Guys, I hope that helps. Let's not make it harder than what it is. Apple's on a great run here. I want to see it consolidate a little bit more, but if it does get that push over 145, definitely looking to take that play into the next supply zone.